Good evening, traders, and welcome to BCI's Evening Market Outlook. Let's take a look at how the markets are shaping up as we head into the end of the trading day. First up, let's have a look at the US dollar and some US equities. All eyes are on the upcoming non-farm payrolls report. Our view is that the data will likely come in line with the expectations, supporting the ongoing rally in equities. That said, we're keeping a close watch on the US dollar. Short positions on the greenback are still dominant, and if there's a surprise, the so-called pain trade could be for the dollar to move higher. It's also worth noting that the correlation between the S&P and the US dollar index has shifted during the rebound from the April lows. That correlation turned from negative to positive. If stronger data fuels asset volatility, stocks could come under short-term pressure, even as the broader trend in the labor market points to slower hiring without a surge in layoffs. Clarity on the trade matters, which could emerge this week, which might change that dynamic and encourage fresh hiring. Let's talk a bit about oil, WTI. Oil prices advanced on Wednesday, lifted by geopolitical concerns and trade headlines. Iran's decision to suspend cooperation with the UN nuclear watchdog has heightened fears of renewed tensions in the Middle East. While there's been no actual disruption to supply, markets have priced in a geopolitical risk premium. Meanwhile, positive sentiment from a new trade deal between the US and Vietnam has also supported prices. Looking ahead, the focus will turn to the jobs data. Strong employment numbers could delay Fed rate cuts, while weaker figures may accelerate easing. Either way, interest rates will play a key role in shaping oil demand alongside ongoing geopolitical developments and inventory trends. Finally, let's turn to gold. We've seen a tactical rotation of funds into silver and platinum, largely because of valuation gaps. Since May, gold open interest has dropped by 18%, while silver and platinum have seen gains in fund interest of 33% and 49% respectively. Despite that shift, gold remains the standout hedge against macro and geopolitical risks. The recent correction appears shallow, with strong strategic demand likely to keep buy on the dips as the dominant strategy throughout the year. Gold's lower volatility, about half of that of silver and platinum, continues to make it more of a reliable safe haven asset, especially as silver and platinum's industrial exposure could weigh on them if the economic outlook dims. That wraps up today's review. We'll be monitoring the key data releases and market drivers closely. Thanks for tuning in, and we'll see you in the next update.